Broker Bulletin acknowledges the traditional custodians of all the lands across the country on which we record our podcast and pays its respect to all Aboriginal and Torres Strait Islander people. Welcome to the Broker Bulletin podcast, where better begins. Join us as we chat with brokers about what's working for them, what drives them, and the real challenges and wins that matter most right now.
Welcome to Broker Bulletin, your shortcut to better broking. I'm Lisa Jackson, and today we're diving into property trends to watch in 2025. I'm so excited to have our guest today, Nerida Conisbee, our chief economist at Ray White, one of Australia's most quoted property commentators. You've likely seen her on ABC, on the primetime breakfast shows, or headlining major conferences. Nerida has this wonderful ability to turn the complex economics into something we can all understand, even myself. Nerida, welcome to the show. Thank you for making economics so human.
Thank you. Thank you for having me.
Before we delve into the market trends today, for listeners that might not know you, can you tell us a little bit about your journey to becoming the most trusted voices in the Australian property market?
I guess it started back in the 90s in Melbourne. So I was really good at maths. I went to Melbourne Uni. I studied economics. I was going to become an actuary, but it was a little bit boring. So I switched over to econometrics and I entered the workforce with, at the time, quite an unusual background with data, because data at that time, it was very slow and difficult. We used to run models overnight. It was, quite different to now where things move really quickly. And I got a job doing economic forecasting for a property consulting firm. I got into it that way and led to lots of different opportunities, and also led to being within quite a changing industry, because obviously data has exploded. Everyone's so interested in data, but also data is really quick and easy now to access. So 25 years later, here I am, and still in property and still looking at what the trends are in the industry, but also more widely in the economy.
That's some pretty deep experience in property and data. So thank you for being here to share that with us. Before we look ahead at 2025, I think it's important to take a moment and just reflect on 2024. For many people who have mixed emotions about 2024 as a whole, it's no secret, though, it was a really tough year for brokers and Australians in general. Interest rates staying high, mortgage stress hitting record levels, and the housing crisis just dominating the media. Can we delve into the trends and the shifts and maybe start with your scorecard on 2024?
Look, it has been an interesting year because on one hand, we have had cost of living pressures and high mortgage rates have been very stressful for people. Being a renter hasn't been any better. Obviously, rental rates did increase very rapidly. Same time, we saw low unemployment. So I think on one hand, although people were very, very stressed about their finances, at the same time, they weren't particularly worried that they were going to lose their jobs. We entered that environment at the start of the year, but at the same time, we were seeing a much stronger property market than expected. And it was a range of factors. I mean, I think this is the thing with property. We tend to look at interest rates and we're like, oh, interest rates are high, therefore prices will drop. But it's not such a simplistic relationship. And high population growth, construction costs were very high. We weren't seeing much housing supply being built. Then migration was also high. So, there's lots of people coming to Australia, but a lot of people moving around Australia. So that created pressure in some markets. So the start of the year was really great for sellers. The market was moving quite quickly. Prices were good. There was a lot of demand in the market. And as we got to the end of the year, that's when we really started to see a lot of the cracks emerging. So we started to see a lot of properties come to market. It was partly because of investors selling out. Holiday home sales kind of were going on throughout the year. But I think too, mortgage stress really started to cut in, and it was surprising it took so long. But I think what happened was that when we came out of COVID, interest rates started increasing. People still had a lot of savings. And so they were just spending down their savings, waiting for those interest rate cuts. But when they didn't come through, I think that's the point at which people started to just really start to struggle. So that's why we started to see a lot of properties come to market. It was an interesting year, but obviously pricing was far stronger than I think anyone expected, primarily because of the complexity of property markets.
It's a mixed report card.
It's absolutely mixed. And I think this is the thing with report cards, because everyone is in a different boat. If you're a renter, if you're a buyer, if you're a seller, if you're a retired person versus a young person, it's, it is a very different mixed bag. I mean, for retirees, many of them, the higher interest rates are quite good because they ended up getting, quite a good return on their cash in the bank. So, but I think, for the majority of people, high interest rates are very stressful. Mm-hmm. And when they do increase that rapidly, it does provide quite a bit of angst in terms of household budgeting.
Sure does. It's definitely the topic of conversations at so many dinners and outings across Australia.
Yeah, absolutely.
So from your perspective, what are the most significant shifts that really shaped the market in 2024?
Well, obviously, interest rates were a big one, and we didn't see a cut. So that was
disappointing.
It was disappointing. It was also really hard to predict because, inflation by the end of the year was within target. So, I think the Reserve Bank could have cut it in December, but they decided not to. They decided to hold out. I suppose that the resilience of the economy was surprising. We didn't go into recession. We are an economy that's very sensitive to interest rate movements. We've got very, very high levels of debt. So we could have gone into recession. A lot of other countries did go into recession last year. Australia did remain quite resilient, which was very positive. Unemployment remained very low. I think that was also obviously very positive if people have jobs. But then I think also the angst around house affordability did continue to rise through the year. And I think this is something that's been a big shift over the last few years. I remember talking pre-COVID around, housing affordability and the idea that, we need to build enough homes to make homes affordable. And at the time, people were like, no, that's not the right answer. But now people recognise that. And I think for me, that's been an important shift that people are like, well, if we build enough homes where people want to live, that's ultimately how you achieve housing affordability. And it's an important, I think, recognition to really solve this issue.
Absolutely. The power of hindsight. Let's hope we can get some things happening on that. Were there any curveballs that caught you by surprise?
I suppose the Trump election was one that was, not unexpected. We were hearing that it was a potential to happen during the year. The impacts of that for Australia aren't great. Whatever your politics are, if you like them or you don't like them, doesn't really matter. But for Australia, the tariffs aren't good news. Really bad news for China, obviously, and we're heavily reliant on China for so many things. So if China's struggling because of tariffs, that's bad news for us. It was a curveball that happened, and this strength, I think, too, has been an interesting impact for Australia as well, that the people have shifted very quickly right, and that's happening globally. And I think that's been quite an interesting shift that's been happening around the world.
Yeah, and some pretty big repercussions off the back of that, which is probably a good segue to talk about the global landscape. So 2025 is shaping up to be anything but predictable. Trump's gearing up for his inauguration. Musk and Zuckerberg are making waves and a lot of headlines. We've got global conflicts raging and they continue to test the economic stability. And closer to home, we've got the Australian dollar weak, inflation sticky and refusing to back down. And we're heading into an election year where housing affordability and policy shifts are set to take centre stage, I would imagine. But for brokers trying to make sense of all of these forces, it's hard to get your head around, the big question is, how are these global and local forces going to ripple through to the property market? And what advice should we be giving to brokers?
Yeah, I suppose it comes down to an important one for brokers would be the outlook for interest rates. And that's something that all of these global changes has implications for Australia. So we got to the end of the year, pretty much every country had cut rates, some places several times. So New Zealand cut 3 times, US cut several times, like everywhere was cutting. We hadn't at that point. The implications though of what's happening globally are a little bit variable. I mean, a lot of what's happening in the Middle East for our economy is quite minimal. We're not heavily reliant on the Middle East. So it's not, maybe a few supply chain blockages could have a little bit of an impact, but we're not impacted in the same way that countries that are far closer are impacted by. Similarly, what was happening in Europe around energy prices, we're not as sensitive to that because we're not relying on Russian gas and, we're not dealing with those same repercussions that they're having to deal with. But at the same time now with what's happening in the US and with what's happening with tariffs, that does have potentially big implications for us, that if tariffs are put on Chinese product, we don't export much to the US, so it doesn't really make much of a difference for us. But if really big tariffs are put on Chinese products. If Chinese products go up in value, that impacts our inflation rate. Similarly, a much stronger US dollar also impacts our inflation rate. So I think this is a situation we're in right now that up until yesterday, we were seeing around an 80% chance of a rate cut in February. But then yesterday, some data came out of the US and particularly the strong US dollar data came out. And as a result, that probability has started to reduce. So we're in this really unusual situation where we don't generally have much control, obviously, over our dollar, but, it is starting to lead to some implications as to what the outlook holds for our interest rate, for inflation, and then flowing on to that, what will happen to interest rates this year.
There's no real crystal ball for this.
And I think that's the hard thing. Like it's, people are like, oh, well, you said this is going to be when rates are cut. And it's like, well, at that point of time, with the information we had available to us, that was what was expected. But this information has now come out. And some things, maybe we can predict, but then other things, such as an election announcement, we can't predict that. We don't know what will happen with tariffs. We know it's a negotiating tactic. So, 60% tariffs on China would be devastating, but obviously China will fight back and then there'll be a negotiation and, at some point we'll probably see tariffs, but they probably won't be 60%. So, those are the sorts of things that are incredibly hard to predict, and why when people build forecasting models, or when you look at market expectations of where interest rates are going, or even, when you develop your own views, it is really, really, really difficult to come up with very firm forecasts.
Bit of like a ping pong ball, just moving around until you actually get the RBA call.
Yeah.
So with the election in our backyard this year, are there any policies or anything that brokers should be aware of or watching out for?
Yeah, I don't think there'll be changes to negative gearing. I think it's one of those things that's very politically sensitive. I mean, we've seen in the past when the ALP have looked to change it, there was such a backlash. So I've got, mixed views on negative gearing. I see why people get upset by it, but at the same time, we rely on it to provide rental housing. And if you have a look at global rental markets, Australia is actually quite an affordable market. And I know that's contentious to say it, but that's data coming from The Economist. They've done an analysis. They've looked across the globe, and we are actually we're not too bad. Like the number of people under rental stress is quite low from a global perspective. So, I mean, that's of interest. Don't know if government's looking at it that closely, but I think it's possibly another one of the reasons why, negative gearing, it kind of works in terms of creating rental affordability, even though it is seen as quite a divisive topic.
Very divisive.
Yes. But so when we look at housing, the ALP and the Coalition have quite different views as to how rental property should be provided. It definitely has implications for REWA in terms of transactions, and also in terms of, it would be for brokers too, because if you have a look at what the ALP see as being the future of rental housing, it is a much more mixed provision. So they don't want it, at the moment almost all of it's provided by mum and dad investors. ALP are wanting to get more institutional ownership. So basically, a big company owns a big block of rental apartments. In the US, they call it multifamily. Here in Australia, we call it build to rent. But that wouldn't need a broker and it wouldn't need a real estate agent. So it's always going to remain a fairly small component of the market, but it does knock out activity in terms of as a policy implication. The Coalition, however, see the role of the mum and dad investor is incredibly important. Their view is that they don't want super funds to own all the rental properties, and they don't want the unions controlling the construction. They're kind of fundamental differences in the way that they're looking at construction, ownership, use of super funds, all of those things. But it does have some implications for the level of transaction activity, which ultimately, if when you're an agent or whether you're a broker, you want transactions taking place because that leads to activity in the market.
Yeah. Just shifting gears now to 2025 and some predictions. We touched on it before, but there's been a lot of buzz around the possible interest rate drop as early as February, which people are going, woohoo, please, please. ANZ have even put it in writing. Many weeks to go till we get the call. But could this bring some much needed relief to borrowers and buyers? And do you think this could be a turning point?
Yeah, I mean, if it happens, it'll be fantastic news. I mean, at the moment, right now, today, the market is pricing in 4 cuts this year, the first coming in Feb, and then, sort of 80% chance or 75 to 80% chance. So
don't go higher.
I know 100% would be good. But yes, at the moment, but then there's so much data coming out. Everyone's like, on edge a little bit. But anyway, so if it comes in Feb, we see 3 more cuts. Obviously, that makes a huge difference to people's budgets. 4 cuts for many people, particularly people in Sydney, where housing is so expensive, will feel incredible relief. In terms of the housing market, we did see quite a rapid slowdown in price growth at the end of last year. So I think CoreLogic recorded a decline. We didn't see a decline. We saw more flat conditions in Melbourne, flat conditions Sydney, Hobart, a little bit of a drop, Canberra flat. Rest of Australia still quite quick. Like Perth, for example, I think is running at about 20% price growth at this point, which is down from 25%. So, it's come back. Yeah, the market has slowed down. We are expecting the start of the year sellers to be fairly cautious, buyers to be cautious. But I think those rate cuts, when they start to come in, that's a point at which we'll start to see more price growth coming through, and probably more transaction activity too.
Yeah.
But, last year we saw a lot of transactions, but it was because of very high levels of distress. But if the property market is recovering again, that will probably bring more people to market as well.
So what data points are you obsessing over to get an understanding? Because it sounds like it does change on a dime. What are you looking at?
Yeah, look, it does depend on what's happening in the economy. Like at the moment, obviously inflation, because the Reserve Bank do target inflation. They use interest rates to get inflation to between 2% and 3%. So that's the way they fundamentally operate. But obviously they look very closely at what's driving inflation. So at the moment they are looking at inflation, but they're also looking at unemployment. So that they have come out a few months ago and said, inflation is very low, but we also know that unemployment is also low. So we would like to see unemployment rise a little bit before we start to cut rates. At this point, because they're signalling that's important to them, we're all watching that really, really closely. The dollar, of course, at the moment is quite concerning that it is so weak. It does make things very expensive for us, and that has implications for inflation. So then that's another thing that we're watching very closely. But it does depend. I mean, sometimes the dollar is pretty stable and not much happening, and you kind of leave that alone and you don't watch it. Inflation, until COVID, people didn't really look at it. We looked at it, but because it shot up so high during following the pandemic, it suddenly became super interesting. And I wouldn't have often spoken about inflation data coming through because it was didn't vary that much. But suddenly I'm talking about inflation all the time.
Yeah.
So it does change a lot. It does depend on the environment, the economic environment that we're in.
So I can sort of imagine that you have 25 screens around you and you're monitoring everything. For brokers who may not have access to all of that data at their fingertips, do you have any go-to sources that you'd say, I really recommend this?
Yeah, so the best one really is the ASX interest rate futures index. So obviously the banks come out and say, we think interest rates will hit this level. And everyone gets it wrong. It's just the nature of the beast. But when looking at interest rate forecasting, there's 3 ways you can do it. You can build a model and you just keep adjusting that model depending on what's happening. You just make a call based on your own personal view and what you're seeing. So that's also a common way. And the third way is looking at, people that are actually putting money down on what the future of interest rates are, what are they predicting? And I always think if you've got skin in the game,
yes,
you're probably going to, me saying, it'll happen in Feb, it doesn't really mean much. But if you're actually putting $1 million down that will happen in Feb, you're probably thinking it through in quite a different. And if there's a lot of people doing it that way, then you're probably thinking it through in quite a different way. So if you go on to the ASX, you can find that, and what it provides is what the market probability of a rate cut at the next meeting, and then you can also look at the outlook. So you can start to look at when are the cuts coming through, what does it look like by the end of the year. And again, it changes all the time, so just be mindful of that. But that's a very useful one. Every Monday, go have a look, see what they're
bookmarking now.
Yeah, and also it does, because it's so real time, every day it changes. It does provide a very, very up-to-date impact. And even things like the announcement of, or, when we start to see the dollar weaken, it's updated. Like you can start to see the change in what's happening or when inflation data comes out. So the inflation data that came out last week, we went from a 70% chance of a rate cut to an 80%, and that happened overnight. So it does give you a really good indication of what's happening. And it's easy. It's really easy to understand when you have a look on there.
That's what we like to hear. Easy. Yeah. So beyond February, what major shifts do you anticipate in Australia's property market for 2025?
Yeah, so if we see rate cuts, it will lead to prices picking up again. And we did some research at the end of last year looking at historic impacts and what the cuts have done. And Sydney is the most sensitive to interest rate increases and cuts. And then places like Perth have traditionally not been as sensitive. So it is likely that we start to see cuts. We'll likely see an increase in transaction volumes, and we'll also likely see price growth starting to pick up again. And the reason why prices will also pick up again is a lot of the other fundamental drivers of price growth are still in place. We still have problems in the construction sector. We still have population growth. We still have housing supply challenges, and they're not going away anytime soon. So that will also support pricing.
We've also heard a lot of discussion about emerging hotspots, like regional areas and suburbs where affordability might still be within reach, What are you seeing right now, and how do you think that's going to impact brokers and their clients?
Yeah, so I guess there's areas, I suppose there's two parts to it. There's areas people want to be, and that's really pushing up pricing. And at the moment, very clearly, there's probably three major areas. The first one is what we're trying to get people using the term the golden arc. But basically the area, it's not just southeast Queensland, it's basically the area from Byron Bay heading up north, Tweed Heads, Gold Coast, Brisbane, Sunshine Coast. And that area, it's just an area where people want to be. And we're seeing so much population growth as a result. And so much so that even with cuts to migration, it'll probably make little difference because the population growth is partly coming from international migration, but it's coming from population movement from other parts of the country. So that area we think is, long term is an area that's going to continue to really evolve and will continue to be expensive. It will become more expensive. So Gold Coast is such a good example that the median now is sitting at about 1.1 million, more expensive than Melbourne on a median house price data.
Who would have thought?
Who would have thought? Yeah, I wish I thought more about that. That would have been good. But, if you look at pre-COVID, 2019, the median was 700,000.
Wow,
so it's gone crazy. So that's an interesting area. Perth is another one. So
does it have a name like the Golden Arch?
No, I've got to think of one, but then maybe people won't understand what I'm talking about. So Perth is another one. So lots of population growth to Perth. It does tend to move more with the mining cycles, but I think it was also a lot of catch-up that took place in Perth as well. So that seems to still be happening. Perth is a market people are a little bit careful in because it had, last time it crashed, it was quite spectacular. So people are, a bit hesitant, but that's doing very well. And then Adelaide is another one. So Adelaide's really interesting. For a long time, it was our cheapest capital city. It was cheaper than Hobart. That's changed. They do have a really popular premier there at the moment. He seems to be doing really good things in terms of attracting investment, attracting tourism. And then there's quite good conditions in mining. So regional South Australia has had its best 2-3 years ever over the past 2 years because of what's been happening in mining and tourism and agriculture, which has been a real marked shift. So they're probably hotspots in terms of where people want to be. And then affordability, there's lots of really affordable homes being built on the outskirts of Melbourne. So, that's an area that you can get quite affordable homes. There's always affordable pockets. I mean, Adelaide's also a good example because the median is half that of Sydney, but incomes aren't half that of Sydney. So it does show that there's probably quite a bit more movement that we could see in that market based on the fact that it is still very, very well priced.
And if you could share one unconventional prediction for 2025, you might have to get the media team to censor this.
Yeah.
what should brokers be looking out for from your unconventional prediction?
Yeah, I guess this is probably a prediction that I think will hold out, not just in 25, but long term, is that I just can't see prices falling in Australia. And, every downturn we have the same forecasters coming out and predicting a 30% fall, and we never see it. But I can't see it happening. And I can't see it happening because we are a country that likes big homes. But at the same time, the biggest rise in household type is single person. You can't suddenly adjust your housing supply to account for that. Also, we love big homes. We love spare bedrooms. We've got 16 million spare bedrooms. People don't want to give them up. So there's structural problems in the market, but it's not all we blame developers, we blame the government, and obviously there's fault across the board, but it's also our preferences that we love space. And so we can't have affordability when we've all got so many spare bedrooms and we're all on really big homes when there's only one or two of us in them. That's really fundamentally why we're not going to get affordability in Australia.
You give up those spare bedrooms.
Yeah.
Wrapping up with you, Nerida, what's one key takeaway you'd like brokers to keep front of mind as they navigate the property market in 2025?
We will see rate cuts this year. I'd be very, very surprised if we didn't. There will be relief for mortgage holders. And then I think too that transaction volumes will also increase. So I think, end of last year was pretty good in terms of transaction volumes. I think the first quarter will be a bit challenging. I think people will be sort of watching and waiting. But I think once those rate cuts start to come through, I think things will really start to improve.
Yeah, so good for brokers to just stay close to their clients, keep listening to your advice, keep their customers informed of what's going on so they can help their clients navigate those challenges and opportunities.
Yes.
At Broker Bulletin, Nerida, we're all about finding the 1% improvements that might lead to some big wins. What's one small thing that you do every day that helps you with your performance?
Yeah, I guess, it sort of changes. So at the moment, I am really looking very closely at my team's performance. So I've been at Ray White for 4 years. I've been building, working with my team, building media presence, building content. But this year, I've got some really top performers in my team, and they're really starting to hit their strides in terms of producing content, doing video, getting out there on the speaking circuit. And I'm like really loving it. So I'm like, so now I'm kind of, still doing my job, my external profile and all the rest, but I'm just really focused on pushing them out as well. And that's been kind of satisfying for me at the moment.
Yeah, that's so wonderful to hear. And I'm sure your team are just so thrilled to have you backing them and supporting them. Thank you. Thanks for sharing that insight. And for all of your insights today, we're so grateful that you could give up your time. We know how precious that is. So for listeners who want to dive a little bit deeper, be sure to check out the Ray White and Loan Market Property Report for 2025 and stay tuned for more episodes of Broker Bulletin.
Thanks for tuning in to Broker Bulletin. We would hate for you to miss an episode. Subscribe to Broker Bulletin in your favourite podcast app. Has this episode been helpful? We'd love you to rate and review us. It'll help us deliver content that's useful to you and help others discover us. If you have great ideas for topics worth tackling or have burning questions you'd like addressed on an upcoming episode, reach out. Links in the show notes. See you next time.